Analysts at Parthian Securities said they expect investor sentiments to remain mixed as buy interest in some bank stocks positively tilt the overall direction of the equities market. Chinazom Izuora, Senior Associate Investment Brokerage at Parthian Securities, joins me for this discussion. Chinazom, thank you so much. Pleasure to have you on the show.
Thank you for having me.
It's been a somewhat busy week if one thinks about the Fidelity Bank rights offer and, of course, a public offer. I believe that was on Thursday. That was actually yesterday. We're talking earlier about the stock. We've heard comments from the CEO talking about what the funds will be used for. We know obviously it's part of meeting the requirements for the capital, showing up the capital base requirement of the CBN at 500 billion now. But talk to us about how the market has responded so far in terms of the share price movement and just overall reception from the capital market.
Okay, so thank you for that. I think Fidelity started earlier than the other banks, so qualification day for the rights issue is actually January 5, which indicates that this has actually been in the pipeline since last year. And just before the offer opened on Thursday, so on Wednesday, we saw a significant move in the market price of the security. Of course, that is to prepare it for this public offer, as it's expected that public offer prices, whether it's a public offer or a rights issue, are usually at a 20–30% discount to the going market price to basically create an incentive to take the offer. Because if the market price is lower, there's no incentive to participate in the offer. So I think the market players have been very on top of creating that interest and creating that sentiment. And of course, we love to see positive sentiment, because what happens is when there's positive sentiment and there's all this fury because of the offer, it actually affects the entire market. And we've already seen that positive uptick, especially in banking stocks. Since we started getting news of these public offers, we've also gotten indicative prices for access. And we've seen publications, so we've seen GT publications, although we haven't seen indicative price levels. But even in GT and Zenith, UBE as well, we've seen positive uptake and increased transactions. So,
I mean, obviously that's saying rising tide lifting all ships, but yes, it's lifted just the banking sector. Have we seen this tide impacting on other sectors of the market, consumer, oil and gas, and the rest of them?
So that's the thing. So different sectors are dealing with unique issues, right? So with the banking sector, we don't see them dealing with the FX revaluation that the manufacturers and the consumer goods are dealing with. So just looking at their Q1 numbers, they're profitable. And we expect their Q2 numbers are going to be just as good. And for the banks that pay interim dividends, we'll be expecting to see if they are going to factor in their upcoming public offers or rights issues in that decision of how much to pay out as interim. Right. So it's interesting.
Definitely, I mean, certainly interesting to see. But let's take a couple of steps forward. I know, I mean, there's still a long ways to go between now and the deadline in 24 months for this bank. But how does this structure, change the dynamics for the banking industry? Looking at a bank like Fidelity Bank now, 500 billion, and the bank says it's confident that it would even surpass that amount. But we know that for a bank like Fidelity, the focus has always been that retail, end of the market, SMEs, classified as a tier 2 lender. Although that probably is changing now. But could we see this type of bank take on bigger ticket deals? I mean, with a bigger war chest, I would imagine that would be what would happen.
I mean, I think the management of Fidelity has shown that they're very strategic in their approach. So just listening to their facts behind the figures with the NGX yesterday, they were very clear on their understanding of who their customers are. So they're very clear on their customer base and the need that they feel for their customers. So what they've actually said is that the expansion strategy isn't just to go anywhere. They are paying attention to where their customers are saying they would like their support. So I think the expansion is going to be very strategic. So we might not see them going to the usual. So most likely, if they're facilitating trade, they may be looking to acquire other banks in strategic places that will facilitate their clients' transactions.
Well, what they have talked about, I mean, expanding footprints on the African continent, but we know they have bought a bank in the UK Union
yes.
Bank, so obviously hence the international, having to retain that international license. But you're right, quite interesting. But let's talk about, I mean, the market so far this week, Friday. I believe we had 2 days, okay, just 3 days.
We lost 2 days.
We lost 2 days to trade, so I suppose not much has happened. But in terms of for trading next week, let's talk about what stocks that are investors rated. What are investors going to be looking out for? Are investors even paying any attention to the economy? We had inflation out this week. That wasn't, still going in the wrong direction. Are those things still in the minds of investors?
I mean, so with the inflation issue, like what's still at the back of the minds of investors is, are we going to see another hike at the next MPC? And what strain is that going to add to businesses? Like you said, the inflation is still high. We're seeing things just seem to be getting more and more expensive. But what is also interesting is that some of the companies, if you look at the Q1 numbers they released, revenue is up, but cost of goods is equally up, and it becomes a balancing act. So I think what good organizations are going to do is pay attention to their cost and try and keep it low so that they will remain profitable.
For those for whom it's a numbers game, especially in the fast-moving consumer sector, I suppose the numbers are still there in terms of the consumer numbers. So, like you said, that balance between not raising the price to the point where there's a pushback from the consumer and also managing costs. I mean, not the best times for those for those companies, obviously. But going into next week, what are you expecting? Do you see this? This catalyst that we've had this week, I mean, the buzz around Fidelity Bank capital, is that going to spill over into next week? Yeah,
so the Fidelity one, we're going to expect the company to continue trading within the current ranges. So we expect that the market is going to keep it above 10 Naira, sustain that momentum throughout the period. The rights and the public offer are open till the 29th. Or the 29th of July.
Yes.
So they're going to try and maintain that momentum. And I think they've done very well. There's a lot of buzz on it on social media to sustain that momentum. And then we'll see that trickling into some of the other banking stocks. Because people are going to be saying, relative to Fidelity, what price are these other people going to come to market at? And trying to position, especially if they think that those securities are currently undervalued.
Right.
We're going to be seeing people moving into that. And then June is H2, so we're coming to half year. As we move towards the end of the month, we're probably going to also see some movements in other securities, with whether it's funds and portfolio managers trying to close out their half-year numbers.
I mean, they will have to close out this Q2, right?
Yes, and we might also see movements in companies that pay interim dividends. So we might see people also wanting to take position ahead of those qualification days. So end of June, early July, we might start seeing some of that momentum
driving the market higher. All right. Thank you so much for talking to us. We do appreciate your time on the show. I've been speaking to Chinazom Izuora, Senior Associate Investment Brokerage at Parthian Securities.